take it from here. And can everybody hear me? Okay, I think everybody can hear me, and let's start the webinar. The webinar today would be about support resistance, how to identify them. We'll go on to learn how to find entry points and stop points. And finally, I would show you some tools that you can use as entry and stop strategies. But let's move on. I think this webinar would be about 45 minutes to an hour, depending on how many questions there are. And feel free to ask questions, and I would try to answer them along the way. Okay, let's move on. First of all, when you are going to find support and resistance, I personally always start with the longest possible chart that I have, and try to identify what is the trend, where do I have the major points in this, and then I work my way down all the way to hourly chart, 15-minute chart, 5-minute, whatever. But the procedure is the same all the way. So let's start with this one. This is a hourly, monthly chart of the euro dollar. And I would keep on going with the euro dollar all the way today. So there wouldn't be any changes from this, but it's fine to do what we are trying to do today, showing first of all how to find support and resistance. So first of all, what I'm doing is I'm trying to identify where is the major trend. Is it up? Is it down? Is it sideways? What is it? And from this one, we can see that the major and long-term trend is up. It's been so since 1972. And you see we have higher highs, higher lows all the way. And we still have that. It's not broken. So the trend, the long-term trend, remains up from here. So the question is, maybe we are going to see a break from this, or are we going to see a new higher high above the 2008 high near 160? As you can see here, the medium trend is lower. We have seen it move lower, but still we haven't seen a break from the 2001, 2002 lows near the 82 level. So the trend, the long-term trend is still up. The medium trend is down. So we are now conflicting where are we going from here. In my view, the most important trend is always the long-term trend. This is the one defining where we are going. And of course, the medium trend in this case, it has been going on for about 12 years to the downside, but still, this could just be a pause in the long-term uptrend. So let's try to find some long-term support and resistance. And what I always do is I say, when you have a peak in the chart, as you see in 1980, as in 1994, and in 2008, 2009. They are the long-term resistance lines. And it doesn't mean that you can't break them, but they are the ones that you would like to see. And the support is where you have the bottoms, as you have here in 1985 and in about 2000. And you had one in about 2016. This one is still open for debate if it's going to be a long-term support or is it just a pause in the medium downtrend. At this point, we don't know. Okay, let's move in a bit and see how we have been doing. If we take the trend line now, adding to this, we can see that we have broken the uptrend line several times in 2016 and again in about 2020 2019 and 2020, but we have also broken now the medium-term downtrend. So is this market up or is it down? Still, we don't know from this, but I would teach you a trick here. If you see something like that and you don't know what it is, then take the two peaks that you have here in about 1997 and the one in 2008, and then move the trend line that you have here parallel down to the bottoms, and you have one here in 2001 and you have one in 1985, and you can see from those one that the trend is still up, and this is the medium-term trend. So the question is now, if we have finished the medium-term trend, we have broken the the downtrend line, but we still have the medium-term resistance, and we haven't broken that. So we can't say for now that we are shifting from lower bottoms and lower highs to new higher highs and higher lows. So right now we are in between in the long-term picture. So we have to wait to one of those breaks, either the medium-term resistance or the medium-term support, to say which way are we going. A qualified guess, as the long-term trend remains to the upside, and we have broken for now the medium-term downtrend. I would expect that we break sooner or later the medium-term resistance and move higher, and this one is at 125.55, but nobody knows at this point, so we just have to go with the flow as it is. But this is a neat little trick with the trend line. So take it from, if you are in downtrend, take some two low points, connect them, and then shift the trend line you get to the upside and see where you get that. And that's often a very good trick to secure what is the trend and what is the long-term trend. Okay, now we move this in a bit. This is a shorter term time frame. This is the weekly chart. And as you can see, we have broken the downtrend. And now we're looking for, as I said, we don't know if the medium trend downtrend has finished, or is it still just a sideways trend that we have seen now. Actually, if you take it from here, you have seen from 2015 and to about now in a more or less sideways market. But we know that the uptrend is the strongest or the longest. So it's likely that we will see this move to the upside and eventually break the medium-term resistance. Okay. So now I've moved in from the weekly to a 4-hourly chart. We're taking the daily too, but it's not necessary. And you can see I've done the same here. We have seen an uptrend, the medium-term uptrend since about March 2020. And this is still we're still in an uptrend from there. This is the short-term trend. And now we can add in the support and resistance lines the same way I did before, and we get the shorter terms resistance and shorter term support from that. And with the channel, I'm doing the same as I did before. I'm taking the tops here. I'm moving this down to bottoms, and you can see that we catch the bottom in March 2020, and again in April and May, and we haven't broken that. So now we have the long-term trend is up, the short-term trend is up, and the medium-term trend is still in between here. So you have, even though we have you can say we have been in a sideways trading range for the last 5 years or something like that. You still have opportunities to trade within this. You just have to go down the time frames and decide what time frame do you want to trade. You can actually go down even further from here to the 5 minutes if you are a day trader. Personally, I don't like that. I'm not a day trader. I'm trading for the longer term trades. That's my way to trade, but it's individual, and everybody can do whatever they want. As you can see, I made this in mid February as I prepared this webinar. And at that point, we hadn't been trading up to the short-term resistance I have here at the 121 about 90. But actually, we have broken that since, and now we're just moving up and down near this. And what you should know about resistance and support is that it's not like going into a wall where you just stop blank when you see either support or resistance. This is more like an indication of where do you expect the market to maybe run into some difficulties to move ahead. And you can see that if you go down, look here in August, September 2020, you can see we meet the former resistance line. Now we have changed it to support. When you break it through it, then it changed from resistance to support. And you can see at that point, we broke it a couple of times, moved down, and then it moved ahead higher. So it's not like running into a wall, but more indication of here you're going to see something, and often you will see the market move around the support line or the resistance line for a period of time and then move on again. And that's pretty common. So be aware of that. This is not a perfect art saying that when you have drawn a support line, this is support and you can't break it. You will often see market breaks it and then takes a break from there and moves ahead like we see it here in August, and then actually only first in end of November we break it for real and then moves ahead. Most of you have likely heard about the Fibonacci, which is a good way to find support and resistance too, if you are in doubt how to do it. And what I do is normally I'm looking, let's take from March 2020, I look at the first move here, and then I say my system can calculate it, but I could do it too. I could take from the low point to the high point, calculate the 61.8, the 50, and the 32.8%, 38.2, sorry. And those would give me where I could expect support at this point. And as you can see, the market moved down and went into support near the 61.8 to 78.6. And that's very common when you see the possible new trend starting, that the first move or the first correction you will see after a initial move is pretty deep. However, if you look from the end of April to the beginning of September and take the same Fibonacci's there, you have the 23.6 to 38.2. And if your first one was very deep, as you saw down here in April to May, then expect the next one to be shallow from this one. And you can see it stopped in between the 23.6 and the 38.2. And that's very common. One is pretty deep and the other one is shallow. One is likely simple, an ABC, and the next one is in a complex way. You have the A, B, C here, trying again, and then a new one. So that would be a very common way to see corrections. One is deep and simple. One is shallow and complex. But the Fibonacci way is a pretty good way to do it. Let's say that we have completed the entire move from mid-March 2020, and now completed it in the beginning of 2021. So where would the targets be? Again, if we take the Fibonacci, the 38.2 would be 116, on close to 117. The 50% would be near 115, and the 61.8 would be near 113. And if this is a new long-term uptrend we are in, then we should expect the first one. This would then be the first one of this entire move, and it should be a deep one. So going into close to 106, not 100, but 61.8, or maybe even down to 78.6. And that would not be uncommon to see it there. What I would like to stress here as a support would also be that if you have the first 3 or 4 moves here, 1, 2, 3, and this is the fourth, the correction, the larger correction here, this would be a very common place for the market to at least pause at some point if it's going down there. It doesn't have to go down there, but it would be pretty common. If we take this and look at possible support places, we have the former peaks here, and you can see we have just been down to those. So that would be a expected support. We have the next down here at the 38.2 or 117 or 116. So that would be a support area. And then we have the former peak here, which is close to the 50%, so makes sense. And finally, the 61.8, sorry, would make support too, and going down to near the 112 level, if we are going to see it. I'm not sure we're going that deep, and maybe this is not complete yet. Maybe we need another peak near 124 before this market is this run is complete. Okay. So when I use resistance and support as possible entries. So if we take if we go back to March again and see how the market moved at that point, going up and then taking the breaks, and when you have something like this where you have 3 times you more or less try the same level, this makes an of course resistant, but it makes a perfect place to enter into a new position, because you will have a relatively short stop on your position, and when it breaks, you can be pretty sure that it would move the distance that you have in this consolidation area you have here. So you add those, you take that distance from, take say 107.5 to almost 110, so that would make about 2.5 or 250 pips, and you can add them to this, and that should make at least 112.50 as the first possible target. Just going from there, it doesn't have to stop there, but it would give you a target, and you can see that we paused a bit higher, and then made actually almost the same consolidation as we did down here from March to mid-May. We did that again in mid-June to about mid-July, and then we broke away again. And then we saw it once again here in August to September and broke away again. And that's pretty common. And every time you go into this, you can add the stop just at the low you saw just prior to the break. So in this case, if you buy here near this breakout, you can add the stop down here, and you have just a bit over 100 pips. So of course you have to, if you think this is too far, you can move the time frame in. You can go into maybe a hourly chart and fine tune it. You might even, if you want that, you could take the stop here at I would expect that to be close to 109.50 or something like that. This one you see here. Or you can, and the same over here, you can use this one. That's pretty close, and the risk of you getting stopped but is there, but still it would be a possible area for a stop if you have entered the market. And you can see again, I've just moved it up. This was the latest one we saw over there. And you can see that we moved nicely ahead from every time we had a entry here. We had seen a pretty good move from there, and still we haven't broken down through the last one, which now acts as a support area. And every time you move from one entry to the next entry, you move the stop along. So if you had this entry as the first one, and you take this as the second one, then you move the stop up to this area. So now you have locked in profit, and the same here. As you see here, you move the stop along, and this would be a pretty common way to do it. To move the stops higher and secure a profit along the way. And right now, if you have been all the way in this one, you should have your stop along near maybe 117, and maybe even be able to move it a bit closer now to just above 119, as we have been up here, and try to break above the 122. So if this break fails and we move down, I would expect us to go down to the 116. So that would be a pretty common scenario. If this one fails, we have tried it, and if it fails, then the market or the bears would be stronger than the bulls right now, and then we should expect stops to be taken out that has tried to go long here, and they would be taken out down here, and then that would push the market even lower. So that would be a way to move or to use resistance as entry points, and then have supports as your stop points, and move the stops ahead if you have an entry. If you have an entry over here near 119, I would have expected that you have moved it along. But if you have a very long period now, you should be able to take it up here at least and secure profit no matter what happens. Another way to make entry points and exit is very common. It's just moving a simple moving average, and when the longer or when the shorter breaks above the longer, as it does down here in June, that's an entry point. And if you see it, it's actually around the same place where you moved into. If we go back, this is around the same place. The problem with this is that sometimes you go into, if you have a long period of consolidation, you have some false entry points. You have one here that would likely have made you go out here and then into the market again. But if you keep on, if you see it over a longer term period, you will for sure make money this way. But it can be pretty costly if you go into periods like this before the next real move starts. So that would be, I would expect or recommend you to try to find out which moving average works. And in this case, I can see I've used the 100 and 200 and used that on a 4-hourly chart. And it seems to work well. You don't have too many signals, and when they are there, they seem to be working quite well. The entry point down here, exit up here, so that would have made you about something like 800 and 900 pips. That's a nice move. And again over here, if you're taking out here, you would have a new one into the market here at this point, and out here that would have made you another 500 pips. So pretty good. And I would say I normally don't use this kind of entry point myself, but from time to time, if I'm in doubt, then I use them. I put up some simple moving average and then just look at them, see how they work. And you can, if you want to, you can use only one. That would be a possibility too. Find a long-term, or not long-term, but a moving average that works. As you can see, when I break it this way, that would make sense, and then go into the market. In this case, when it's a 4-hourly chart, I wouldn't recommend it. But if it's a weekly or maybe even longer, then it can be a very strong way to just see it. And let me say one thing more here. As long as the moving average, especially the long one, points higher, the trend is intact. Often they start to act as the market support line, as you see it here, and then it's just flattening out here and then starts moving up again. This is very common, and you see that that's typical. You see the first move sideways up, and then pretty often that's it. Maybe we will have one more up here, but time will show. I will come back if there is a question. I will take them just, so let's just take this. This is actually working on the same way. It's just a system I took from the chart system I use, where it's a trading view. I think it's a nice system. It has a lot of features, and you don't have to make it more complex than you want yourself. But as you can see, you have some nice entry points here too. Every time it's green means you have been buying, and every time it turns red means that you're going to sell the market in this. And again, simply when you have a sideways market as you have here, you have some false entries and selling points, but in overall in this one, you could be pretty sure that you are going to make money. And it's actually working in the same way. The size from a simple moving average, that is just to replace the band. So it's coming from there, and there's nothing. And I just took this from, actually, this is a system that is in the trading view. And I know that a lot of system has similar stuff on it, and it's coming for free. So it's just try and error. What works for you? A bit the same here. You have a true average, true range, average true range, and it's working the same way. You have the entry. You can see actually you have almost the exact entry that we had just from drawing the resistance line, going into the market, and then just you can see how it moves up. Exit here, interest here, exit here. You have some losses, but then everything is given back to you and more to here. So this would have been a very nice move in this one too. But works the same way. Okay, and finally I found a system that was built into the from stochastic slow, and you can do it this way too. This is when the stochastics move crosses like in moving average, and you can see in this case, going back, there was 86 trades. From those, 74% was in profit, and the profit factor was 1.5. So for every loss you have 1.5 in plus. So would have been a pretty good system working this way. So this is what I would like to present from this. Any questions? I'll just go back. Loud and clear. Perfect. Can I ask you? We use more time frames. I think the question here is, could I ask you, if we use more time frames, won't we get fake signals? If the lower you go, the lower time frames you have, the more fake signals you get. And that makes sense because you have a more the volatility in a smaller time frame is larger than it is in the larger time frames, and therefore you get more fake signals from that. But fake signals isn't always a bad thing, because if you get one or two, you know more or less that you are in a sideways movement, and sometimes if say you're used to moving average as your entry point, you can just say, okay, as long as I'm in this area, if we go a bit back to this one, you will have a couple of fake entry and exit points here, and it would make sense to say, okay, I won't use them before I see a break out of something that makes sense for me. It could be as I have here, this line, or I could maybe move it a bit further up and do it up here and say, when I break this point, I would enter and I will have my stop down here, and then I go back to using the moving average if that's your signal, and you'll see in this case you will have got it around here, or you will stay in it from here, and you will get an exit up here, and still you have made money from this move if that's how you like to do it. One thing that can be difficult when you do something like that, when you say, okay, now I won't follow my strategy that I normally follow, is to believe in what you see. So if you normally do this and you said, okay, I'm out here, I enter again here, and believe that, and you have one fake move more, then it can be difficult to believe when you break up here and say for instance here, or the next one up here, is it a valid signal at this point? And then if you use the moving average, look at the way the average is pointing. If it's up, then believe it's up. If we turn this upside down and it was down, believe it's down. Believe what you see. Believe what you know is the normal way to trade. If you disbelieve what you see, then don't trade it. Back off and wait for it to come with a new clear signal that you can use. Otherwise, you just get into trouble. Okay. To understand this, if it's cross support, it would be a buy, and if it cross the resistance, it would be a sell. I think you are up here at this point. I would not be happy to, let's take this as an example. This is the 4-hourly chart. We know that the long-term trend is up. So what I would be looking for is almost entirely buy signals. I would not be happy to go out trying to sell a market where I know the long-term trend is up. The trend from in this case mid-March, I know now is following the same trend, and at some point here we broke above the medium-term trend too, as we saw it here, and that was near 200 or 115 or 115. So I would not be happy to try to find sell signals here. That would not be my way to trade. I would go with the trend. I would try not to do it. I know when I'm down at the short time frames, yes, I would sell, but I know the risk. I know where the risk is, and I would move my stops closer, and they will be quicker to. I would be quicker to take the stops if we was that I'm going to do. So in this case, I would only look for entry points, and as you can see here, that would be the entry points, and I have to stop below. Entry point, stop below, entry point, stop below. I would not have a entry point and stop reverse down here. That wouldn't be my way to trade because I have the long-term trend up. I'm now seeing higher highs, higher lows, indicating a new trend going in the same direction as a long-term trend. I would be it would be a danger to sell here, and if I did, I would be pretty quick to maybe take profit or get out of the market if it's turning against me. Next question here is which of them is resistance and support? Please tell me. I think that this is a pretty good example of all the resistance that you see. You see this area as a resistance, and then you break it. And when you break it, this one turns into support instead. So this would be resistance, break, now support. Go higher, resistance, break, this will shift to support, go higher. Again, same stuff all the way. As long as you are with the trend, this is the way. Only when you start to break it, then you shift the way to look at it. So here you have, let's say, the short-term trend here. If you have taken this one as in a short-term time frame, and said that you are out about here, and you're taking a short position, then you have your stop here, going back. Now you have the support here, you break it, and now this gets resistance, and you shouldn't break back above that if this is a valid sell signal that you had here. You have a shoulder, head, shoulder, should stay below there. It's okay to break slightly above it, but you wouldn't like to see it, and at least not going up here. If you had that, then you have a false shoulder head shoulder break, and instead you should see the market move higher. And in this case, you haven't, at no point you have broken the higher highs, higher lows frequency, and you haven't done it here too. Yes, you have seen a deep correction, but still you haven't broken the higher lows here. So this could be a higher low here, meaning that we are going to see a new move higher. Hang on. The indicator just now before this one, what is it called? This is just simple moving average. This one, I don't know if it was this one. You can find it on most system. This is the SRA. In this one, it's a system someone has built, but this is based on the SRA. Most system has the SRA. It would be like a moving average just going up, and then you will see them going up like here in a dotted line, and then you will see some move ups and down here, and then a long one up here, zigzagging again, and a new one up here, and zigzagging again. So this is just the P here is not anything. It's just because somebody has a system using this, but most system in this has this as a SRA. Question. When people have reduced the amount of capital available to trade, do you believe the smaller time frames, 5 minutes, 15 minutes, 30 minutes, 1 hour, until you get it? I don't think it's easier to trade the shorter time frames. Contrary, I think it's better to trade the longer term time frames. I would not trade 5 minutes, 15 minutes, 30 minutes, or anything to try to build up capital this way, because you have more volatility, and the signals are not that they are not that reliable. So I would still go with the longer term time frame, 4 hours, maybe even daily, but I would make it the capital that I have in every trade. I would lower it, say I won't risk that much, and that way I would try to build my capital. You might be more strict with your stops, but and don't have stops that is that far away, but I wouldn't go down to try to trade 5 minutes. You get a lot of false signals on that time frame, and if you do it, you should still know what the long-term trend or the medium-term trend is. If it's up, then go for the buy signals, not the sell signals at any time, only the buy signals, and use a stop that is well defined and one that you can manage within the capital that you have available. Hope that makes sense. New question here from Andrea. What do you think you used cross like an entry point, support resistance, quite common used? It's not more precise than triple cross. Triple cross, you can use that. I don't see the point in having an extra one crossing. You can do it. I have seen somebody has up to 10 moving average, just moving, and it looks terribly fine on a chart, but I don't see the point in it. Why make it more difficult for yourself? Why delay the entry with if you have tested it? And I think you should always test it. You should go back, find out, does this one work or doesn't it work, and then use it from there and go with it. I don't see the point in having a double cross because you're using three averages. That makes no sense for me. And I would even go if I could find a moving average that makes sense for me, go down to just using one and say I would go with this one if it's a good one. But I would test it, I would see if it works, and then I would use it. Could you show and explain the setting of the moving average and the stochastic? The settings, in every system, you have a place where you have some indicators. And normally you just find the moving average. In this, it could be a simple moving average, it could be an exponential, it doesn't matter. It's the same. And what you do is normally the system just gives you something. Maybe it's taking the 10 and 2 times 10, and then you just change it. In this case, you can see up here. Now, if we go back to this one, if I clicked on my moving average here, the 100, it's the blue one. If I clicked on that one, it would open a possibility for me to set it to a different number of periods. The 100 periods, this is just going back 100 periods, adding them all together and say, where's this point? Then the next point, doing the same, and then add it. And then you get this one, and it's only a time delay. What you're doing is you're delaying the time a bit and how the market is moving, but what it gives you is a sense of direction of where is the trend going. So if we go back here in May, April, March, May, and April, where you see just this sideways trading, when it starts to move, you have the cross here, and when it starts to move higher, both of them, then you have an indication, okay, the trend is now shifting, it's going from sideways to up. I know the long-term trend is up too. I know I've been in a downtrend. Maybe it's coming to an end. There's a lot of, then now this is over in a different topic, and I won't touch much to it, but you could go in to look at the RSI, see if you have maybe a divergence in this area, saying that this could be a potential bottom. So you're maybe looking for a bottom here or an entry point. Maybe you use this as an entry point. Maybe you use, as I showed before, when you break the resistance line here as the entry, doesn't matter. But you now know, because both moving average is pointing higher, that this is now a new uptrend. If it's the other way, as you have up here, now both are your exit and both are going down. Should you take that as a sell signal? Not in my opinion, because you know that the long-term trend is up. So it might be a bad signal up here. It maybe you could make some money from it, but the risk is too big, and I don't think that it's worth to take a risk like that. At least when it's not paper money. If you just want to test a system, take every trade that you can. Try to find out what's doable, what's not doable. If you take it, let's say this one, this is a super signal at this point here. It's pays for every mistake you're going to make from this point and forwards. Take this one. If you sold here, you will get into the market near this point. You will get out at this point. So that would be a bad trade. You will lose money on this one because you will get in close to the bottom and you'll get out close to the top here. So you lose money on this one. But then if you take this as a buy again, then you will be out here and everything would be paid for once again. So when you do it as paper trades, fine. take every trade you can, see what works, what doesn't work, and in an uptrend, selling when two averages cross doesn't work. Taking all the buy signals would normally work for you, and especially if you have tested the length of the moving average that you need. 100 and 200 would be pretty common. You can use them in a daily, weekly, whatever. I'm pretty sure that you have read about now we are crossing the 100-day moving average, or the 50-day and the 200, and some are using those as a support and resistance. And yes, they might work, but I would never use them in that way. I use them as a guideline, saying, have they crossed? Are they up? Are they following the trend I expect? Have they crossed? Are they down? If they're down in an uptrend, would I take it? No way. I would wait for the next entry, and it would be up here, and wait for it. And I wouldn't exit before I have the next exit. You can see they touch here, but they don't break. I'm pretty sure within the day you have seen this going up and down, and you can't just trade it within the hour. You have to wait for it to confirm that it has broken. If you use this as an entry. If we take the stochastic, that was this one. This one works on the stochastic, which is an indicator, and the indicator is again two moving average that has whatever time frame set up for it, and when they cross, this is where you have the entry, and way up and down, and you can see this has a pretty narrow. This is again on the 4 hourly. And you can see he has a lot of trades, so that means he's pretty close. That's not 100. I think this is maybe 8 and 20 hours, maybe even less. Maybe it's 8 and 13 hours, something like that, or 4 hourly time periods. But still, they are pretty close. You can see he has a sell here, a buy here, the blue one, and a sell here, a buy here, sell here again. He's not in at all at this point. He's buying here and selling here, so he's getting into trouble at this point. But and still, as you can see, it works. But if you trade something like that, you have to follow it. You have to go with it when you. And in this case, I'm not sure I would go with the sell signals. If the uptrend is up, I would just go with all the buy signals and use those, and not necessarily sell as he has it here. And I would try to keep on with within the trend. Okay. Hang on. Maybe this one, the average true range. This is a actually it works in the same way. It measures the range that you're working in, and it does it. It's within it's like a moving average, but what it does, it is more like it's a trailing the trend, and it's, if you use this, the nice thing with this is that it gives you a possible stop area all the way. And when it breaks, when it closes below this green line here for the first time, then it turns red and say now it's exit, and maybe even sell if you want to do that. Still, I wouldn't recommend it, but at this point, you say the entry that you took down here, you should exit here. and then wait for it. And you can see here, you would take a new entry point, you will buy here, and you will get stopped out down here before a new entry up here again. And this is what happens sometimes. You would have some, what you should expect within moves like this, where you go sideways for a multiple months of time. If you get an idea that this is going on, you might not just take the first one. You might be looking for another entry point, but still taking it up here or down here, you'll make good money on the last move you see here. And still, I wouldn't take this as a sell opportunity, even though it's pretty steep. I think this was the one you're thinking about. This is from L, nothing else. Otherwise, give me a hint and I would look at it. I saw you use the Elliott wave theory on your chart analysis, so I got kind of curious about it. Do you think I can provide a reliable trading signal by itself, or should I be accompanied? I think that you can use it. What I wouldn't do, it's not true, because I do it when I write for InstaForex. I use the Elliott wave, and I go for the targets I calculate. So if I have a 5-wave trend, as let's take it from here, 1, 2, 3, 4, maybe 5 up here. If I calculate a target, let's say I have calculated 123.20 as a possible top. It wasn't the top at that point. It was closer to 124.50, I think I have calculated the top to. So, but if I had at 123.25, I would take the trade. I would go short on that one, just because I've calculated it based on the Elliott wave. But I would have my stop, and it would always be in place, and it would be just above the top over here. I would say I could I would live with half a 50 pips as my risk, whatever. As you can see here, I have no natural stop point to place my stop if I go for this one. So should I take it? I don't know. I would normally use something else to say, is this a qualified entry? I would look for the RSI. Do I have divergence? I maybe look for a trend line to break. I would say, okay, I'm in the market. I'm happy because I have a profit in this run. I would have a stop reverse maybe down here when I break the trend line, and say, okay, at that point I will enter in the market. I will have my stop above here. Now I have something I can relate to, and not just have something where I have taken this taken a position up here just because I've calculated it. But it works, and I've done it many times where I've been able to hit the almost the exact bottom, the exact top, but I have also made lots of mistakes. And you will make mistakes within the Elliott wave. It's not an exact science, and it's very important that you allow for yourself to make mistakes, and don't beat yourself up about it. Everybody makes mistakes, and you can make sure, and what's important is your money management. It doesn't matter if you make mistake if your money management, meaning that you have your stops in place and you don't risk too much. that's the way to handle it, and that's a way to be the best trader that you can be. I would always recommend any of you, whatever you do, make test runs, make paper trades to begin with, to find yourself a style that you trade. It could be classic technical analysis where you look for formations. It could be just from the simple moving average. You don't have to think, you don't have to learn it. You just see those two crosses, find out what's the trend. Everybody can see that. And when you have that, go with the signals that points in the direction of the long-term trend or just a trend. Don't go against it. It's always when you see a move starting and it has run for quite a period, as you see here, it's tempting to try to go against it, but don't do it. Just exit, wait for a new signal, and then go again when you have the new signal going with the trend. Don't try to buck the trend. It's not a good way to trade, and it often it just means that you're going to take a lot of losses, and sometimes taking losses, you don't want to take them because it hurts, and then you just let them run. And if you let them run, that's it. Then you're finished. I've seen it many times. I've been a trader, I've been a customer advisor. I've seen customers do this a lot of time. Just say, this one isn't the actual signal. I'm sure it's coming. And when you're getting into the belief or hope, then you're actually moving over to the church. This has nothing to do when you are in the trading area. Hope is not the way to do it. You have to believe what you're seeing. If your stop is hit, get out. It hurts, but it's the best way, and that's the way to survive in this market. Oops. The Ichimoku cloud indicator. I haven't anything on it here today. I think it's for me, it doesn't clarify things that much. It's a bit like this one, but you have some extra moving averages around it, and it works pretty much the same way. In this point, you will have those two cross something over here, and you move over the cloud. It's a bit like you have, if you do, I don't know if you know it, the Bollinger Band around this one, you will have a shadow falling below and a shadow falling above. And this is called the cloud. And at some point they switch, as they would do something like here. And then you have the entry point. And for me, it doesn't make sense to look at something. I don't think it's an easy indicator to use. I think this one, or even the moving average, if you want that to be your way to make entry points and exit, is a better way to do it because it's more clear what you get, and I don't see the point making this indicator to your resistance and support area this way. But I know a lot of people that use it and think it's fantastic, and hats off. I don't use it, and I've seen it, I tried it, and I don't like it. But if you think it's working for you, go with it. Always go with what you think is working for you. I've tried a lot of things. For me, the Elliott wave, I do, when I look at a chart, I do a lot of classic charting within my head. I'm always on the outlook for a shoulder, head, shoulder. bottom as we have down here. It could be, if I see this one only as a cup with a handle down here, shoulder, head, shoulder up here, and maybe this, and actually we have seen this break back about here. So this shoulder, head, shoulder top has failed. So normally when one fail, you will see the opposite, going to the opposite direction for the same distance that you have here from this point. So it should make it at some point up to about 124.50 or something like that. But I would, I do a lot of that stuff within my head, but at the same time, I'm using the Elliott wave because it makes sense for me. I think it's pretty easy for me to see that this is a 5-wave move. 1, 2, 3. The third is mostly or often the longest. So it makes sense for me. I would, when I have this one and calculate this and see the break here, I would always calculate the extension target, which is 168% length of this one. And that would give me a target up here or something, some way. And if that doesn't make the top, then it would be the 200%, then 261.8%, 300, 361.8, and then it's 423.6. And that's not the final one, but that's in the Forex market, it's very often the final one, and you don't get them much bigger than that. You can, but that would be very seldom that you see them move outside that band. But that makes sense for me. I have 1, 2, 3, and then this should be the 4, and then the 5 up here. And the question is, was this a final one, or do we see one more? This could be 1, 2, 3, 4, 5. It would make sense for me again, and especially taking into consideration that this one failed, this shoulder head shoulder failed, and all we need to see now is a bit higher. But if we are going to see it, I don't know. At this point, everything can happen. We could be finished, and at this point, I would likely be out of the market and over here have a new entry. This would have made a new entry and be in the market again for a continuation higher. And again, you could very conservatively, you could put the stop down here. That's a bit far away, or you could use it just below here in this one, depending again on how aggressive are you, how much do you want to protect yourself in protecting your money. It would be pretty expensive if you don't have a large capital to have a stop down here, and it would make sense to have it up here. I don't know if we are a bit over an hour now. I don't know if it's okay, or I don't have one last question to you. Which color is Dow? Could you what chart are we on now? Is it the first ones, or is it the last ones here with the entry? Are we here at this or over here? Normally I don't have different colors on my where I have resistance and support, because when I just look at it, it makes sense for me. I would draw a line like this one and say, okay, this is my support. When I break here on this, that would be my resistance line. Then it changes to be the support line, but it doesn't matter if I'm going to break it slightly, because I would have, in this case, I would say this would be my stop if I enter here. this would be my stop down here or at this point, depending on how aggressive I would be, and then see how long it could move, and depending on and I would have a stop moving higher on this one to up here if I didn't use any of the mechanics like the moving average. Then I would move it up here when we break above here to move it here, and this one again when we break this one I would move it up here, and sooner or later at the latest I would get out at this point here. Maybe I would keep it at this point, so I would be stopped out at in this point about 121, something like that, and I will have the entry at 119. So it still would still have made me about 200 pips just in that short time frame. Okay, I have no more questions. I hope this is that you have it, and yes, I would just say thank you, and hope that there would be another time, another topic. Could be indicators, it could be anything. Trying to look at the different stuff. We have had the formations, now the support resistance, and then we could maybe do it where we make all in one. But for now, this is it. Hope you enjoyed it, and thank you very much.